Vietnam posted 9 months of 2025 GDP growth of 7.8%, the highest in Southeast Asia, and concluded November with a solid macro picture. Despite concerns over U.S. tariff risks, the economy showed remarkable resilience. Exports grew 16.1% year-on-year, while FDI disbursements rose 8.9%. Public investment continued to be a powerful driver of growth, while inflation remained contained at 3.6%. On the external front, Vietnam further elevated its international standing by forming 5 new comprehensive strategic partnerships, reinforcing long-term diplomatic. Carrying this momentum into 2026, we expect the economy to enter an acceleration phase with GDP projected at 8.0%. The new 5-year leadership cycle, set to be finalized in early 2026, will reduce political uncertainty and anchor a pro-growth economic agenda. This transition lays the foundation for a period of decisive execution as the country directs its focus toward long-term development priorities. Infrastructure will be the major growth engine in 2026, as Vietnam prepares to kick off large-scale projects across railways, airports, and the national power grid. Historically, land clearance has been one of the biggest obstacles to timely project execution. Recent regulatory reforms, faster compensation procedures, and a more streamlined provincial governance structure are now helping to ease these bottlenecks, paving the way for much faster implementation. Long Tan International Airport is a clear example. Although construction officially began in January 2021, meaningful progress only accelerated from 2024 onward, after Vietnam introduced major regulatory changes to unblock approvals and improve coordination. As a result, the project has advanced rapidly and is now moving into its final stages, with commercial operations expected to begin in June next year. Financially, Vietnam is at a position of considerable fiscal room. A USD 13.4 billion budget surplus and public debt at just 34% of GDP provide ample space for development spending. More notably, the government is exploring ways to mobilize untapped household capital, particularly the large volume of gold held outside the financial system, which is estimated to 13% of the country's GDP. Proposals such as a 10% tax on gold purchases and the establishment of a national gold exchange aim to channel idle assets back into productive use. Vietnam's equity market gained 31.1% in the first 11 months, the strongest rally in Southeast Asia, and the FTSE secondary emerging market upgrade to be implemented in September next year. Corporate earnings were equally robust, with listed companies reporting 29.3% profit growth for the first 9 months of 2025, yet 2/3 of the VN Index's gain came from Vingroup-related stocks, where fundamental improvement has been limited, leaving the rest of the market overlooked. In 2026, we expect a transition toward an earnings-driven market. The top 100 listed companies are projected to deliver EPS growth of 12.3%, with Vingroup-related firms contributing only marginally. Excluding this group, the market trades at an attractive PEG ratio of just 0.96 times. As a result, we see opportunities in the broader market, especially sectors that closely tied to Vietnam's economic expansion. 3 major investment themes, in our view, are infrastructure and FDI inflow, rising disposable income, and digitalization and capital market upgrade. Foreign capital is also poised to return. The FTSE secondary emerging market upgrade is expected to trigger passive inflows, while global institutions such as JP Morgan and Vanguard have signaled deeper engagement with Vietnam's equity market. At the same time, Vietnam continues progressing toward MSCI emerging market standards and a sovereign rating upgrade. Practical actions and studies from the authorities includes reviewing foreign ownership limit for some sectors, English disclosure requirements, and central clearing counterparty. Now is an attractive entry point for investors looking to initiate or increase exposure to Vietnam. The global backdrop is turning more supportive for emerging markets as interest rates move lower, and Vietnam is positioned to be the fastest-growing emerging economy over the next decade, with projected annual GDP growth of 6.2% according to S&P Global. The country is entering a phase similar to China in the early 2000s, when large-scale infrastructure investment became a powerful catalyst for consumption, corporate earnings, and long-term equity market performance. Market liquidity is strong, with average daily trading value in 2025 reaching around $1 billion USD. The concentrated nature of the 2025 rally has also left meaningful pockets of undervaluation. The top 100 non-Vingroup companies, for instance, are trading at a 2026 forward PE of 11.5 times, which remains below regional peers and highlights the breadth of opportunity beyond the headline index. Overall, 2026 marks the beginning of an acceleration phase for Vietnam. At TIM, our portfolios are positioned to capture this next stage of growth, focusing on companies with stronger balance sheets, more compelling dividend yields, and earnings momentum that outpaces the broader market. Before we conclude, as this will be our final update of the year, we would like to share a brief message. With the holiday season approaching, we wish you a joyful Christmas and a prosperous New Year. Thank you for your continued trust, and we look forward to partnering with you in 2026.